It's time for Wise Money with Korhorn Financial Group with certified financial planners Kevin Korhorn, Mike Bernard, and Josh Gregory.
Welcome to another episode of the Wise Money Show with Korhorn Financial Group, where every week we're helping you take your next wise step in your financial life. Thanks for being here, friends. My name is Mike Bernard. I am your host. I'm also one of the certified financial planners on the program. And with me in the KFG studios, my business partners and fellow CFPs, Kevin Korhorn and Josh Gregory.
Beyond how much you've saved up for retirement, what are the critical components of your finances that determine whether or not you're on track for a successful retirement? That and more on this hour of the Wise Money Show.
I'm talking fast today, guys. I'm just going to warn you. I'm thinking slow, talking fast. So please correct me when I make mistakes. But we're going to get into it. We're going to help you retire with confidence. If you have a question for the program, if you have any needs, we are here for you. You can call or text us. 574-222-2000. That's 574-222-2000. Online, wisemoneyshow.com is where you can find us. Engage with us that way. And then all over social media, wherever you're at, we are there as well. Just search the Wise Money Show. Still dealing with this poison ivy in the prednisone. I think I'm just like amped up, guys. So put my seatbelt on or like strap me in the chair if needed.
No,
so
keep
anyway.
going. I love it. I am a fast talker, slow thinker. Been one of those my whole life.
Okay, so I got to share this and as we wade into the topic today. Reading a fantastic book. And sometimes we do get folks reaching out on the YouTube channel or whatever saying, hey, what are some good books to read for, finances and all that? Morgan Housel's The Art of Spending Money. That's the new one. So Morgan Housel, we've talked about it before. His first book, The Psychology of Money, fantastic read. Right. I would say it's a must read. And then he's got the weird one, same as ever, still a good book, but not super applicable. But then The Art of Spending Money, and he's in art specifically because he states, hey, it's not a science. There's no one way to do it. As much as I love the book, there's quite a bit. If we were interviewing Morgan on the show, maybe we'll be able to do that soon. I'd argue with him about a few things, as a financial planner and seeing thousands of financial situations. I'd probably challenge him on a few things. And yet, these books are not instructional, but they're more thoughtful in thinking and what's your approach. And so I'd strongly encourage it. Now, I share that as a backdrop because we're going to talk about how you, what are the ingredients? What are the core components, the critical components to ensuring that you're on track for a successful retirement? We'll define that here in just a second. And I think of Morgan Housel because if I were to just ask you that question, you'd probably say, well, you just need a lot of money saved up. We would say that's not true. That's not enough. Is it critical? Does having a lot of money saved up help you have a more confident retirement? Yeah. But is that the sole ingredient or even the most important ingredient? We would argue no. So similar to in The Art of Spending Money, I think people, he says people want to have a happy life. The more they spend, the more they get to do. Therefore, they think the more they spend, the more happiness they'll have. Therefore, the more money they have, the more they'll spend, the more happiness. And he says, no, that chain is broken. That's not actually how it works. And I would, and we can debate that on another topic, another show. But we would also argue that, having a lot of money saved up absolutely helps you with retirement. But that as its sole focus or singularity is not enough. There's 5 factors, guys. Yeah. What would you add?
But there have been commercials on TV in the past that you need to have a certain dollar amount saved, right? That's not a new concept, and it's not one that I think people have just stumbled into on their own. They've been, in some ways, it's hinted at or it's taught to them, when you get to a certain dollar amount, then you've got the green light.
I think that is pervasive thinking. I completely agree. Yeah.
Yeah, I was talking with a client, and he had a good amount of money. I'm not sure exactly how the conversation came up, but the question was, well, will you ever run out of money, or are you ever concerned about running out of money? And he said, no, I'm never going to run out of money. And I thought his confidence was piqued my interest. And I said, well, why do you say that? And he said, because I'm not into luxury. And I thought about that, and I thought, oh, yeah. So he's a guy that could sit in the front of the plane if he wanted to, but he still chooses to sit in the back of the plane.
Yeah.
And so I love watching people like this, or even reading stories about guys like this. A guy like Eric Prince, who could afford to do whatever he wants, and he instead of getting a hotel room, he's sleeping in his Ford F-150 at an athletic
I don't
event.
know if it's just that we're from the Midwest or whatever, but I love those stories.
It's cool. I know.
Yeah.
It's cool to me anyways.
Yeah.
But luxury, I mean, there's a time for luxury and pampering and extravagance, but if you said that is my top priority, you better have a bunch of money.
When it comes to retirement, we've seen people retire successfully with just a few $100,000 saved up. We've seen people that have come to us and said, I'm not able to retire. I don't really have anything saved up. And we found a path for them. And then at the same time, on the other end of the spectrum, we've seen people come to us with a few $1 million saved up and had to tell them the tough news, hey, you're not on track, right? So it really isn't just about how much money you have saved up. There's 5 factors, and how much you have saved up is, and how much you're saving is one of those. But Josh, before we get into some banter and some, what are the critical components or subcomponents, let's share the 5-factor framework, because truly it's not a guesswork whether you're on track for a competent retirement or not. There is a bit of science and choice. There's 5 interrelated factors.
Well, and this is how we answer the question when people show up saying, here's what I've got, is it enough?
Yeah.
And, you could answer by your gut, but what if you didn't have to? What if you could follow a planning process and evaluate reality? Part of it is, well, at what age are you planning to retire? Because earlier takes more resources. It puts more strain on your finances. Second one is, how much are you planning to spend?
And we're going to debate this. That's a big one. That's a big one.
Absolutely. The more that you plan on spending, the more preparation and more resources it's going to take to make your retirement successful. How much income are you going to have in retirement? So of that spending, how much of it's covered by a steady flow of new dollars coming in each year versus you needing to generate income off your portfolio or draw off of your portfolio? How much are you saving between here and retirement as well? What's the pace of new money going into that retirement nest egg to build up for the future? And then not just saving it, but how are you investing it? What kind of risk are you allowing yourself to take to give yourself a growth trajectory to get up to the right size resources, the right income, right lifestyle, all of that?
So those are the 5 factors. Now, there are sub-factors to each of those, but before we share some of those, just to give some context here, we always say that those 5 factors are choices, one, even though sometimes they don't feel like it. You might have a goal to retire at a certain age, but then a retirement date is forced upon you because of your health, because of a family situation, because of a job layoff or job change, something like that. So some of these, yes, are choices, but then that choice is taken away from you. But they're interrelated. We're always specific about that as well. And that being interrelated, I'll just share an example. But each of these variables, making a decision in one will impact the options in the other. And the one that I love to hit, there's just countless examples to show that these are interrelated. But the last one, how much risk are you comfortable taking? That one, I think, catches a lot of people by surprise. Why is that even a 5? That's not one of the factors. Think about this. When I was growing up, had my best friend. He is great family, very kind. Dad was a doctor. And this was before I had this calling to be in personal finance. But he just shared. And, people don't talk about money. You especially don't talk about it with friends or whatever. But he just told me when I was, I think later in high school, when you're having more adult conversations and these people that were like parental figures, now you start having deeper conversations with. And he told me, he said, I don't really trust the stock market. I'm willing to work longer so that as I save up, I just invest in treasury bonds. And I get a low rate of return, but I feel more comfortable with that. And I'm willing to work longer because of it. And that represents that trade-off, right? Yeah. If you say, I don't want market volatility, and therefore from a risk standpoint, I want low risk, that's going to mean lower return. Sure, more confidence in those returns, but that's going to mean you either need to work longer, you need to save up more, you need to spend less, you need to find other sources of income, right? There's trade-offs there.
Yeah, that's exactly right. And everyone makes their decisions on those trade-offs, right? And it's not like there's only one way to make a decision or a trade-off between the age that you retire or the lifestyle or the amount of risk and everything. You get to choose that combination yourself, and that's why your certified financial planner and the conversations you have with them is so crucial to the success of your retirement.
Okay, so here's the question, and this is where we're going. The question is, if, going back to where we started, what are the critical components of a successful retirement? If the conventional thinking is, well, I just need to have a lot saved up. Beyond that, because that is important, it's one of the 5 factors. But beyond that, and with that 5-factor framework, what are the other critical components? Like, if you got this ingredient in your retirement plan or in your financial life, you should be on track for a competent retirement. We're going to have a little debate going back and forth. We got that and more coming up here on the Wise Money Show with Korhorn Financial Group. Hello, YouTube. Thanks for being here. This is the Wise Money Show. What you're watching right now is our weekly 1-hour talk show that airs right here on this channel, 10 a.m. Eastern Time, every Saturday morning, also on podcast at the same time, also on a couple local radio stations at the same time as well, which is why the content's structured the way that it is. We break it up for radio. This is a commercial break for radio. And it's long form. And if you say, yep, I like long form, I'll turn it on 1.25 speed or whatever, then great. If you are looking for something more concentrated, shorter, we've got next wise step videos. We've got shorts, all designed right here on this channel to help you take your next wise step in your financial life. And by wise, we mean connecting the 6 areas of your financial life so that you bring synergy to all of those areas when you're making critical decisions. So make sure you hit that subscribe button, turn on notifications so you're made aware every time we drop new content. Like the content if you like the content, and leave comments, questions as well. We appreciate it.
Okay. So the greatest, I think one of the greatest quotes out of The Psychology of Money is about the party, when Kurt Vonnegut who was this prolific author, told his friend Joseph Heller, and he was the author of Catch-22. And so we went through a season, my boys and I read Catch-22, and it is a fascinating book. The founder of Lululemon suggested it. I'm like, okay. So anyways, so Vonnegut tells Heller, look, the host of this party, because this is a billionaire's house, right, has made more money in a single day than Heller had earned from his wildly successful novel, Catch-22, over its entire history. And Heller said, yes, but I have something he will never have. Enough. Mm-hmm. And so he just he argues that many people are skilled at getting rich, but terrible at staying rich because they lack a sense of what enough means for them. Mm. And I'm like, we could just. So
they keep on reaching or keep on rushing towards
the next step. The next step. So because of a little is good, a lot is better. And instead of doing.
Well, I mean, but that's why you need to keep that conversation and that thought process going. It's the exact same thread in the art of spending money, because he talks about the hedonic treadmill, mm-hmm. and talks about how the dopamine, like you just want to spend and you want to feed this. But listen, what's at the root of what actually satisfies you? Now, he doesn't go to faith, mm-hmm. right, as we probably would, but he does go to what are the actual things that are fulfilling in life. You might think, mm-hmm. you want a fancy house or whatever, likely, and I'm not trying to spoil it, but likely you're trying to impress people, and it's probably the wrong people. Like mm-hmm. you want to impress strangers. The mm-hmm. people that actually know you are not impressed by that. Mm-hmm. Instead, if you want a bigger house, that's fine, but have that bigger house in rich relationships. Invite more people over. Have bigger rooms so that you can have more relationships and deeper connection with people. And so that's so good. And it's just it's right on the same line. It's mm-hmm. almost like there's like, I don't know, Act 1 and Act 2 of the same thought process.
I know.
It's really good.
If you ask me what is the favorite thing about my house, I would say getting to see bluebirds, because we never really saw bluebirds. We had all kinds of birds and bird feeders growing up, but we didn't see bluebirds. And so we get to see bluebirds, and I get to shoot woodchucks. Like seeing bluebirds and shooting woodchucks and seeing the chickens just roaming free and happy.
Yeah.
Even though they are on everyone's menu.
Yeah, I was going to say, with no hawks circling in the sky, right?
There was a raccoon chasing them last night.
All right. So now we'll get into it. And there's, we'll just go one at a time, but I would love to go deep and wide. So this is like free.
So it's not like one per segment or anything. It's just what are the other things that we're sort of processing in our mind when someone new comes in and they're wondering, am I ready for retirement? Beyond just the formulaic 5 factors.
And whoever can go first, and we don't all just need to share one. We can share a couple, and if the conversation isn't helpful, then we'll shift it at some point and go to listener questions. So,
cool.
All right, here we go. What are the critical components, or let's say key ingredients, to being on track for a successful retirement? You only want to retire once, so you want that to be successful. What do you need? What are the components that you need? We're going to get into that right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFG studios, Kevin Korhorn and Josh Gregory. Stay up to date on all Wise Money content. Find us online, wisemoneyshow.com, and then all over social media, wherever you're at, we are there as well. Search the Wise Money Show. So in order to be on track for retirement, it's not just a gut feeling, but it's also not just how much is in your retirement nest egg or your retirement portfolio, how much you have saved up. That's important. That's a key factor. It's not the end all be all, and most people think that it is. What are the other critical components to being on track for a successful retirement? And let me define that, because you do want to spend time thinking about your life and what you, what did he call it? We've heard this several times. Stephen Covey talked about it in 7 Habits. Morgan Housel talks about it in this book that I'm referring to, The Art of Spending Money. I think the reverse eulogy, where you basically write it out and what's the purpose of your life? What do you want it to be about? And then you intentionally take steps to get there. So you're going to define success the way that fits for you, whether that is travel, whether that is a long career, whether that is investing and mentoring others, whether it is volunteering. You're going to define that for you. How we would define retirement success is that you are financially independent, where you've got resources and the 5 factors of your retirement plan are working together such that you don't have to worry about outliving your money. Now, Kevin, one of the phrases you share sometimes is, there's no retirement plan that's 100% confident. You're bulletproof, but maybe not bomb-proof. And so that's maybe bad analogy, but that's the thinking that no, you are confident you're not going to run out of money. And so, guys, what I would ask you you can get into one of the 5 factors or go into a sub-factor, but if you were sitting down with a new client and you hadn't done the analysis yet, the 5-factor framework, you hadn't, and you were just getting an understanding of their goals and what their current makeup is of their current financial situation, beyond how much they have saved up, what other component would you look at and to be able to say, oh yeah, they're ready. They're going to be able to retire because they've got this part, they've got this ingredient in their financial life. What would you say?
Well, I would observe, and you can do this over time. What is it that makes them successful? Because we're talking about the components of a successful retirement. And I love to ask our team, hey, what makes you successful? Even we have a whole horde of interns this summer. And
one of them's behind the cameras right now.
Will's observing. And I would say, Will, what is it that makes someone successful? And the answer is
where they went to school. I'm just kidding. Will's going to Michigan State. That's where I graduated from as well.
Yeah. So it's similar to Central Michigan. It's just a bigger party school. So what makes someone successful is their habits. Because everyone tries to think, oh, well, it's this, it's that, it's the other. Well, successful retirement. Oh, I've got this much money saved up, or I've got this much income coming in. No, what are your habits? And so as we meet with people, and what's important to people. So, but you just asked for one, so I would just say, what are their habits, and
what are some of the habits that you would say would give you confidence before doing the analysis, right? You're going as a financial planner and working in all 6 areas of someone's financial life. You're still going to do the math, but what are those habits that you might hear from someone where you would say, oh yeah, they're gonna be just fine?
One of my favorite things, we have a power listener, a mad listener to the Wise Money Show. He traveled here, lives about an hour and a half away. and he met with me and one of our rock star CFPs, Brandon Stoller. And he's 55, worked a blue-collar job his whole life, and had $1.5 million saved up. Now, that is unusual, but it's not unusual for the guy or the gal that starts right out of the gate and saves money into equities, invests in equities or assets, and lets it ride for their whole career.
The habit of saving and the habit of putting those savings to work.
Right.
That's right.
Yeah.
Because I was 55 at the time that I met this guy, and he had more money in his retirement account than I did. And there were a few things in my life, situations that caused my retirement to do a dog leg and a jig and everything. But he had the habit. So without asking him anything, just looking at the documents he provided, I knew he started, because you can't fake that one. You can't get a big inheritance and put it in your 401k. Like your 401k tells, like, it is cutting the tree in half, or I guess all the way through. Whatever.
We got it. That's something I would say, Kevin.
You cut a tree
Just
down.
split it down the middle.
And you look at the rings, and you're like, there's a fatter ring and a skinnier ring. It's like, well, that was a good year, lots of rain that year, and there was a drought that year. But so you can look and you can say, hey, this person has the habit, like you said, Mike, saving, investing, and leaving it alone, and having the confidence that it was going to work out, and I don't need to in the darkest days. And there were some dark days in 2008, 2009, really up to, well.
Yeah, I mean 2018, 2022. I mean, it's a lot.
Keep going. I mean, I in March of 2000, the market was up about 35%, and we ended down 10%. So, I mean, and then 2001 and 2, those were dark days. That's right when Josh was coming in, and Josh it worked really hard, and the market turned around. But it just,
good job, Josh. Thank you.
Yeah. So I would say you can vibe, or you can spidey sense, but you can also look at certain, I'm going to just say, financial DNA samples and say, oh, yeah, they have the habit. Well, or another habit is managing your cash well.
I think those go hand in hand. I think the flip side to the coin that you were referring to on this habit of being able to save and put the money to work, as you said, Mike, in order to be able to save, you have to have control over your spending. You have to have control over the cash that is being generated. And that's one of the things that I look for. I have just recognized over the years that the people who are the most solid, the most successful financially in their retirement, they have the least amount of worry or concern, the fewest number of crises or emergencies that jeopardize or put them at risk or anything. It's the people who have control over their spending, and they always have. And that is a habit. Yeah. And you could call that budgeting. It can be way more simple than that, though. Like it doesn't have to be some amazing spreadsheet that you've built or some sort of system that you've created. At the end of the day, I go back to what Kevin told me maybe on day one of my career. If you can live off less than you earn and invest the difference, so much of this just takes care of itself.
Right? I bet you're going to say, shave, young man. Is that what he told you on your friend?
No, I wasn't able to shave yet.
But say that again, right? That's foundational habit and principle.
It is. It's if you can live off less than you earn and invest the difference, do that over time, and your financial future is going to be bright.
Yeah. If you said, I don't want a complex financial life, I just want success. Here's how you do it. You joyfully live on less than you earn, and I would say challenge yourself. Live on considerably less than you earn. Yeah. If you're just getting married right now, only ever live on one income. I mean, say, hey.
If you have two incomes, Kevin, you shared a clip from Jay Leno interview, I'd seen this a while ago, where he, throughout his reign in the Tonight Show, he just always thought, well, that's a vapor that could go away tomorrow. And so I'm a comedian. I'm going to live off my stand-up. And any checks I get from Tonight Show, I'm just going to save. And so what'd you do with that money? It's still there. It's just sitting there is kind of the answer. So if you have two incomes, maybe live on one, right? And having that habit. Now, it doesn't mean that you've got to have this like either martyred existence or vanilla existence or no life experiences. I think it's more so just about balance. And how do you manage having experiences while also living within your means, below your means, so that you've got that amount that you have saved up. All right. What are some of the other critical components to retirement success? We've got that more coming up here on the Wise Money Show with Korhorn Financial Group. Okay, bonus content. Let's do the opposite if you have one. The last time you told someone they weren't on track to retire, what was the variable? What was the factor where you said it's because of this that they? I've got one.
Spending.
Yeah.
Like not being. Everything was always out of their control. You know, we have to go to this wedding in another country, and we have to take that trip, and we have to go to these restaurants, and we need to live in this neighborhood, and it all adds up to a lifestyle that was bigger than what their resources could handle. And they were unwilling to adjust the spending.
Dude, spending is a heavyweight champion of the world.
Yeah.
And especially the financial planning world. It will knock you out. I mean, you are either going to win with your spending or get knocked out with your spending. And I had the most delightful meeting with Taylor last week with a client whom we both dearly love. We get such great joy from serving our clients because they're just delightful to serve. But she's emphasizing, like, listen, when we look at probability of success, we really want to be, somewhere between 80 to 85 if we can. But if we needed to, like if there was a time when it was at 75, we could make adjustments to get it back to where it needs to be. And he wanted to make a meaningful purchase, very meaningful. And he was trying to convince his wife that it was a good idea. And so she had a technique built into the plan. And she said, well, here, let me show you.
Taylor did?
Yeah.
Okay.
She said, let me show you, if you buy this, this is what happens to your plan. And she showed him, and boom, a probability of success is now 70. And his response, he smiled, leaned in, and said, beauty. And she didn't know what to do. She was almost, because she's very serious, and I think she was traumatized. And I'm like, oh no, Taylor, listen, there are people in this world that are very optimistic, and this guy is one of the most optimistic guys I know. And he's going to say beauty because he wants his wife to be good with the purchase.
Yeah.
But it is, this is not going to put a hole in their boat below the waterline. If they do the purchase, they will be fine because they will make adjustments elsewhere. And they're saying, hey, this is more important to us than having those investments working and growing for us.
Yeah.
And so, but as a financial planner, we could coach them on the trade-offs, and they know. And Taylor probably only said it 10 or 15 times more, like, hey, so this is what is happening. And
I don't know if I've explained these numbers to you well.
It's tricky because I know, knowing Taylor, she would not feel comfortable at 70.
No.
And you just gotta, as a financial planner, you're serving them. And you've got to use your own, expertise and experience, but it's their plan. So, all right, third segment. Here we go. Josh, I'm gonna tee you up. So
great.
And let's keep her going.
Yeah, because Josh is going to give his one.
Yeah.
His one thing.
Yep.
Okay.
Having a successful retirement, being on track for a confident retirement, it's more than just how much do you have saved up. It certainly helps, but there's other factors. There's other critical components to that. We're helping with that right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFG studios, Kevin Corhorn and Josh Gregory. Every episode of the Wise Money Show is on podcast. Wherever you listen, just search the Wise Money Show. Subscribe to it there. Rate the program there as well. That's helpful feedback for us and helps others that are looking for wise content so that they can take the right approach in their finances. Helps them find us. So wherever you listen to podcasts, just search the Wise Money Show. Subscribe there. Okay, so we're talking about the core ingredients to a successful retirement plan. And what I'm challenging Josh and Kevin with, and myself, is, all right, you're meeting a new client for the first time. You haven't built out the 5-factor retirement plan, which is essential. You have to do that in order to determine objectively, are you on track? And then Kevin was just sharing a story about adding a technique or making adjustments, doing trade-offs. Yeah, I mean, that's how you stress test your plan, your thesis, and then build strategies around it. But before doing that, beyond just how much someone has saved up, I'm asking the guys, okay, what are some other ingredients that someone might have in their financial life where you would just say instinctively from your experience, they're going to be fine. They're going to be on track for retirement because they've got this. And Kevin talked about habits, the right habits, the habits of, they're a saver. And then with those savings, they put that money at risk. They invest those dollars. And then the habit of living below their means, right? So I agree with all of that. That'd probably be my first answer as well. But now I'll hand it over to Josh. What would you say?
And I really think the exact same thing. And I don't want to camp out on this spending idea, but the ability to control your spending is, in my opinion, the thing that I'm always wanting to look for first when trying to evaluate, all right, what's my gut saying about this couple? And here, so I'm going to give 3 answers all rolled into that one, though.
Okay.
Like, what are the things that would prevent someone from having control over their spending? And one of the big ones is I'm trying to get a feel for early in the conversations, is this husband and wife, are they on the same page financially?
Yes.
Do they communicate well about finances? Are their values, are they able to state each other's values and each other's goals? And is there alignment? Have they worked out the skill over time in their marriage to get on the same page financially, especially with their vision for the future?
Because hey, Cindy, let's talk tonight.
That's right. Schedule a date.
Yeah,
that's right. And that is a skill, right?
Yeah.
Not every married couple has built that up over time, because sometimes your values and your goals, your beliefs around money can be in conflict with each other. And that has spending implications most often. Each of you pulling the checkbook in different directions, and before you know it, you've spent the same dollars twice on 2 opposing goals, and you don't have those savings available to grow for the future and everything. So being on the same page financially, I think another one that could prevent you from being able to have control of your spending is even a risk management issue. There are some people who encounter catastrophic expenses in retirement, and they are frugal by nature. They have lived within their means their entire lives, and then a health issue or some sort of a long-term care event takes them completely in the wrong direction financially.
One of the subcomponents to spending, there's a lot of them, by the way, but spending is an overarching factor. But beneath that, you've got your base monthly expenses, blah, blah, blah. But then you're going to have your health expenses. You've got to build that out as a separate line item in this 5-factor retirement plan, because to just assume, well, yeah, we're spending, within our spending, well, that'll cover Medicare. Guys, Medicare, the inflation rate on Medicare is faster than everything else. Well, not everything else, but it's above average. And it's also going to be one of your largest expenses. And so therefore, being conscientious during the planning process of, okay, well, what am I spending to transfer risk?
That's right.
So that I can spend a little bit either every month, and a little bit relative term, every month or every year to manage those big events that could completely shatter or shake your retirement foundation.
I'm thinking of a client who has helped shape my thinking on this. They've been retired for maybe close to a decade now. And it's not like they retired with huge sums of money, but again, they retired and they spend within their means. They have their whole lives. If they've got less income coming in, they will dial down their lifestyle and everything. But the thing that has made me most confident for them is not the amount of resources that they have and not just the spending, but they do also have long-term care insurance in place. And so the wild card of health and needing some sort of long-term help or custodial assistance, some sort of medical support in their retirement won't bankrupt the other spouse who didn't have the health issue, right? They've got a safety net that not everybody has.
So when you look at, again, you're looking at someone's situation first time, you're getting to know their goals, and as they lay out, we've got a plan for Medicare, blah, blah, blah. We've got long-term care coverage in place. Those are things, as long as, the spending is within within reason, you look at those ingredients and say, okay, I have more confidence in their retirement plan because of the risk management approach they're taking.
Exactly.
Yeah.
They've proven over time that they will live well within their means at, $75,000 a year. But what about the $180,000 risk that could be looming out there because of health? They've got it covered.
I agree.
So, and then I'll throw one more out there, and this is, again, subcategory of spending potentially, and it has to do with what is their vision for their retirement and what is going to take their time? What are they going to be fulfilled by? What are they passionate about? What are they retiring towards, not just leaving a job? And when someone doesn't have that in place, I'll just be honest. I mean, we've gotten to watch people live out their days in retirement, and some are adrift. Like they really don't know what to do with their time. And so often what happens is you just start spending money. Like you're trying to find that new hobby, or you're trying to get some experiences. You're burning through cash that never was intended to be spent, but you're looking for some fulfillment.
Yeah, I was just going to say that, trying to fill the void.
Exactly.
Yeah.
So people who know what their retirement is all about, they have a strong vision for what that portion of their life is going to be characterized by. They don't just wander around spending money looking for some joy somewhere.
Yeah. What you're describing, though, is much more difficult than you would think.
I know.
For sure.
And if you're listening right now saying, boy, I've been hanging in this because I thought there was going to be some sophisticated planning strategies. We've got plenty of that, by the way. Next week, we're going to hit a very complicated tax planning strategy that you may likely have never heard before and is going to apply to more people. So hang with us. But this is below the surface of all that fancy strategy. This is, I would argue, more important. The fancy strategies fit on top of these habits and these sort of like psychological approach with money. Would you agree, Kevin?
Yeah, absolutely. And it's very, I don't know, it's very complicated because you say, hey, I've got this vision for retirement, but it's like the prize fight, right? The game plan for the prize fight is great until the first punch is thrown. Yeah. And then you have to adjust because we've seen, and I've seen people that as they were retiring and he was still working, and when he came in to sign the rollover paperwork to move his money from the retirement plan at work to his IRA, he had a hard time signing his name. And I thought, well, that seems a little strange. But
like mechanically, he was having a hard time, not emotionally.
No,
hesitancy or anything.
Right. And this is the confusing thing, because what people don't come out and say is, hey, listen, this person has been exhibiting signs of dementia and they've got issues. So they had a vision of retirement, but her retirement was taking care of him for about 12 years until he died.
Oh, gosh.
Wow.
But in the process, basically impoverishing her.
Yeah, spending. Oh,
yeah.
God.
Wow.
So this is where you think, or even just, hey, we want to travel. Hey, what do we want to do in retirement? We want to travel. Well, listen, if you haven't been traveling and you don't love to travel, you might do that Alaska cruise one time and say, been there, done that, got the T-shirt. I'm done.
Yeah.
I don't need to go back to Alaska. As a matter of fact, I don't need to cruise anywhere else. Got the Junta virus, did all these things. I'm done.
Yeah. But I guess, Josh, when I was thinking of some of the subjective things that you just mentioned, there's nothing stopping you. There's nothing. I mean, I was joking, but there's nothing stopping me and Cindy from getting on the same page right now with our values and our vision for retirement, what we want our life to look like. You can do that right now, whether you feel behind with retirement or ahead and on track. All right, we've got more coming up here on the Wise Money Show with Korhorn Financial Group. Okay, guys. Favorite book about money? I'll start. I mean, I have a lot of favorite books. I was actually I truly do. Man, it's probably The Psychology of Money, just because I am. So Kevin, we were in a conversation where you were talking about the Enneagram.
Yeah.
I'm in the head triad. I don't even know what numbers I am, but I'm just always in my head thinking, overthinking. And so The Psychology of Money, it addresses how you think about money. And it doesn't address it like to fix it, but it's very thoughtful, and it makes you it puts new thoughts in your head.
Yeah.
And it makes you think about your approach. And obviously we started this conversation, which is why I'm bringing this question up, The Psychology of Money, and then it really flows right into book number 3, and that's The Art of Spending Money. So I would strongly encourage both of those right up there. It got to be like 1A and 1B, my favorite financial books. So what about you guys?
One of the earliest books that I've encouraged my kids to read is Rich Dad, Poor Dad, which is kind of a classic and a very risky one to recommend, because you can draw all kinds of the wrong conclusions, or you think it's a roadmap for how to build wealth. And I think it's more a roadmap for how to work on your thinking about money. And I just find myself reflecting back to that book, maybe because I read it so early in my career, but I probably think about that book the most over the years.
Yeah, the best part about Rich Dad Poor Dad is just the definition of what's an asset and what's a liability.
I think about that. I probably think about that once a month.
Yeah.
There's something that comes up, right? Yeah. All right.
Yeah.
What would you say?
I'm going to answer your question a little differently.
Okay.
So I was buying some books this weekend, and I did say books, and my wife said, "Hey, you spend a lot of money on books," and
So you're having them shipped to the house instead of to the office?
Well, she's right. No, but she's aware. I mean, she's come to the office and seen, I don't know how many, 10, 12 bookcases we have stuffed with books. And here's the thing. I've been mentored by the smartest people in the world.
Yeah.
And they will send me what they're thinking.
Yeah.
And I get to know what they're thinking, and then I get to take their thinking and say, does this work for me? Could I apply it in my life? How would this work? How would this work if I set aside my preconceived notions and suspended disbelief and said, hey, this book is just right, and I'm doing it. And books have changed my life. And so because I answered her question in just a very kind of airy-fairy emotional way and said, well, what do you think the return on investment is for these books? And so no, that's a very business-like, but that is the question. What is the return on investment, and what is the investment? Like every book I read, I'm making a deeper investment in myself. So what would I pay for a resource to be able to use that resource as a tool to make a deposit in the wisdom bank?
Yeah.
And so that's where I buy books on Audible where she's like, oh, you can get them for free from the library at Hoopla. And, I buy them. I own them. And I buy the actual paper books. And I have a very impressive collection of unread books.
So do you have one?
Yeah. Well,
You
yeah,
still want them to answer
I would.
the question?
No, I like Rich Dad Poor Dad because Rich Dad Poor Dad was one of the earlier ones. I love The Richest Man in Babylon. It's a simple fable, but it is that simple. If you said habits, like what habits do I need? Read The Richest Man in Babylon and translate that to yourself. You probably don't live in Babylon, and you don't have the situation that he describes.
Yeah.
But you can figure out how to.
I would give a nod to, because we talked about The Simple Life and Midwestern, all that sort of stuff, but Millionaire Next Door.
Oh yeah, that's a great one.
And then, of course, you can't ignore, like if I'm giving books to my kids, which is how Morgan Housel writes his books. I'm writing this for my kids.
Right.
I mean, Financial Peace and Total Money Makeover.
Oh, yeah.
Those are both just to either steer clear of some dangerous traps or to find your way out of one if you're in one. All right, fourth segment. That was a long
Fourth
bonus.
segment?
Yeah,
Oh.
long bonus content.
Yeah,
and I haven't given my answer yet.
Yeah, hopefully you've.
Yeah, I didn't know if we've started answering the question yet.
That's what the audience was thinking too. All right, here we go. Fourth segment. Thanks for being here. This is the Wise Money Show with Korhorn Financial Group. My name is Mike Bernard. Here with me in the KFC studios, Kevin Korhorn and Josh Gregory. Every episode of the Wise Money Show, as well as a lot of other content, over 2,000 videos now. I don't know how many hours, millions of views on the Wise Money YouTube channel. Go check it out. Go to YouTube, search the Wise Money Show, subscribe to it there, turn on notifications so you're made aware every time we drop new content. This talk show every Saturday airs right there as well as next Wise Step videos all throughout the work week and shorts as well, bonus content, all right there. Go to YouTube, search the Wise Money Show. You can engage with us that way, leave questions and comments. We appreciate it. Talking about the critical components to being on track for a successful retirement. And if you're just catching up with us right now, the framework is in order to be on track and know objectively that you're on track for retirement, you got to build out a 5-factor retirement plan. These are 5 interrelated choices or decisions that all work together and then our stress test to determine, are you on track? And then it's not just one time. It's not a one-time event. It's the process. You build it out. And then at least on an annual basis, you revisit those 5 factors to say, has anything changed? Like, are you making a different choice? Are you spending a little bit more? Are you saving more? You want to retire earlier? Or are forces working, I don't want to say against you, but are forces imposing a different choice on you? Might you retire earlier? Might you move to a different state and maybe have different spending habits? You need that clarity, that 5-factor retirement plan. But the framework, the thinking today is, say before you build out that 5-factor retirement plan, just as a financial planner, you're meeting with a new client, get to understand their goals, but also their what's going on in their financial life. And I've asked Josh and Kevin, now I'm going to answer myself. What would you need to see in their financial life to say, yeah, we're going to build out the 5-factor plan, but they're on track. They're going to make it.
They got it.
Yeah. And I agree with everything that's been mentioned. Having the right habits, the habit of saving, right, is so critical. Even though you'd say, well, wait, in retirement, I'm not saving. I know, but if you're a saver, then that gives an impression that you live within your means. Mm-hmm. And then Josh just really double clicked and said, yeah, but another ingredient, critical component is that you just manage your spending really well. I completely agree. Now, this one is a little bit controversial, but I think you guys will agree with me. And controversial because it feels more like a luxury and something outside of your control, but it doesn't need to be. If I'm meeting with someone for the first time, and all of those other things that you mentioned, critically important. If I see multiple sources of retirement income beyond their portfolio, I have a confidence that I wouldn't have if those didn't exist. Now, things like a pension, right? And you might say, Mike, pensions are going the way of the buggy whip. Like they're going away, and I don't have any control over that. I know, but it's not necessarily just pension. I heard long ago, you guys may remember this as well, that there's someone said in our industry, based on your spending level, if you have 2/3 of your normal spending covered by fixed income sources, not withdrawals from your portfolio, you're going to be great. You're going to be in great shape. Mm-hmm. I think when I look at someone, whether they've got a pension or if they're just optimizing Social Security or whether they've got rental income or they've got some other sources of income, that is there and will likely last for as long as they live. Mm-hmm. Will be stable despite what's going on with the markets and so on. And it doesn't even need to have an inflation adjustment. If it does, that's even better. I would say multiple sources of retirement income beyond investment withdrawals, to me, that's a critical component.
How important is it to you that those have an inflation protection built into them?
So Social Security is you've got to optimize it. And guys, it's changing. We're doing a lot of content on Social Security right now. It's in the headlines, not because they're going to fix it right now, but because there's a lot of banter and math going around about how could you fix it. And so you've got to be planning ahead for this. One of the unique things about Social Security is it does slay the 3 retirement income dragons that you need to slay, that the income sources will last your entire life. As long as you need it, it's guaranteed. 2, it is going to be the same amount whether the market's surging or the market is going down, despite it, so it slays market volatility. And then it does have an inflation adjustment component. So I prefer all of those. If it doesn't have an inflation component, I still feel confident in it.
Mm-hmm.
I do. So how important, going back to your answer, important but not necessary.
Mm-hmm.
Because, and I'll tell you, because you're going to supplement those retirement income sources with the ultimate inflation hedge, your investment portfolio.
Yes, if you have your portfolio structured to keep up with inflation, right? Yeah. And people who have the big pensions and the big Social Security checks and early in retirement, they can cover it all. If they are also very, very conservative with their investments or just inexperienced in the markets, so the ups and downs, volatility of the stock market makes them nervous, it's something they don't want as part of their portfolio, then this is where you still have to stress test your portfolio. That 5-factor analysis to determine, are you going to be successful? Do you have a high probability of success for your retirement? Because the problem is, if early on you've got lots of streams of income that cover most of your spending and it doesn't have inflation protection built into it, then over time there's going to be a widening gap where you're going to need to cover more and more and more of your spending with the investment resources themselves.
I completely agree. And I'm not arguing with you. The one source of margin or ace up your sleeve is go-go years, slow-go years, no-go years. It's very possible in retirement. Many people will think I'll spend less in retirement, out there in the future. That may not be the case because of healthcare spending or other things. But you do have a little bit of ace up your sleeve in that, it's possible your spending might not go up automatically every year with inflation. So now, how can you, if you don't have a pension, how can you hear this critical component and build it yourself? There's a few ways. Oftentimes, you're giving up flexibility, and you want to do that analysis with your trusted advisor, with your CFP, who's not just trying to sell you investments, who's looking at all 6 areas of your financial life to determine, in your unique situation, could you give up a little flexibility to get this benefit? Yeah, that would make sense. Or based on your makeup, I wouldn't give up flexibility. That would be it wouldn't be a wise choice. And so it could be using certain investment strategies or tools. The other one, rental real estate. Another one that I'm sort of smitten with, and you might say, nah, this is sort of breaking your own rule, is taking a portion of your portfolio and having high dividend investments. Mm-hmm. And if those high dividends covered a large portion of your retirement income, even if there wasn't as much growth in that section of your portfolio, to me, that feels like, because that is the trade-off. You can't get high dividend and high growth. It's just different makeup of the same thing. But I'm sort of smitten with this idea of, what if you took a third of your portfolio and you got a certain yield, and if the math was right and that yield provided enough income for you to live, oh my goodness, that'd be fantastic. So
yeah, you had me at working with your CFP because you want a process, not a product. Mm-hmm. But when you say, hey, is there a way to create an income stream that I can't outlive? There are products that will do that. But what you don't want to do is work with the person who only uses products, because we've met with the clients who said, listen, we can't handle fluctuation. And so they got stuffed full of these products that were terrible for them. Mm-hmm. And you say, well, therefore, all of those products are terrible. And I say, no, Rave Damsey, that's not true. There are some products that are good products. We have a client right now that is turning on the income stream from their annuity, and that is going to slow down the distributions from their portfolio, and they're going to live happily ever after.
And that doesn't mean that annuity is the right fit for everyone in every financial situation. It's just different. So
to me, it underscores this is maybe one last quality that you look for or you love to see with a brand new client who's wondering, am I ready for retirement? Have they just naturally over time built up resources for retirement in a tax diversified way?
Yep.
It gives more flexibility to the planning. It allows them to be tax efficient in retirement, so they're not just having dollars slip through the cracks in the form of too much tax.
Yeah, that's right, because that's a form of your spending. It probably will be your biggest line item of expense throughout your retirement is how much you pay in taxes. Big idea here, build out that 5-factor retirement plan. Work with your CFP to make sure you're being objective and take the right approach so that you can have a competent retirement. That's all the time we have for today. On behalf of Josh Gregory, Kevin Korhorn, all of us at KFG, have a great weekend. We'll see you next Saturday for the Wise Money Show with Korhorn Financial Group.
Securities offered through Silver Oak Securities, member FINRA/SIPC. Advisory services offered through KFG Wealth Management, LLC. Doing business as Korhorn Financial Group. KFG Wealth Management, LLC and Silver Oak Securities Incorporated companies are unaffiliated.